Assalamualaikum. Distinguished guests, ladies and gentlemen, we are about to begin shortly. So during the whole program, I would like to seek for everyone's cooperation to give your full attention and best interest. And should be there any question, please do write it down in the chat box for those who are attending online. Okay. Bismillahirrahmanirrahim. Alhamdulillahi Rabbil Alamin. Wassalatu wassalamu ala ashrafil anbiya wal mursalin wa ala alihi wa sahbihi ajma'in. Assalamualaikum warahmatullahi wabarakatuh. Salam sejahtera, salam Malaysia Madani. Honorable speakers, Mr. Firdaos Rosli, Chief Economist of Bank Islam Malaysia Berhad, our honorable moderator, Professor Dr. Roslina binti Ahmad Saufi, Dean of Malaysian Graduate School of Entrepreneurship and Business, University Malaysia Kelantan, University Malaysia Kelantan lecturers and staffs, respective students, ladies and gentlemen, brothers and sisters. Before we start, let us begin this event with the recitation of Ummul Kitab Al-Fatihah. Amin ya Rabbal Alamin. Honorable guests, ladies and gentlemen, brothers and sisters, I would like to take this opportunity to express our gratitude to Allah Subhanahu wa Ta'ala for giving us chance to gather at this beautiful ambience of University Malaysia Kelantan in conjunction with Mgseb Biz talk. Its economic updates, Are We Ready? Post-pandemic era, that will be delivered by Mr. Firdaos Rosli, Chief Economist of Bank Islam Malaysia Berhad. Ladies and gentlemen, this current pandemic has caused drastic disruption to our daily lives, businesses and economy. Government and regulators are tasked to develop various measures to provide some security and cushion an adverse impact to its people and businesses. Businesses to have been forced to implement workaround and innovate to ensure business continuity and identify enablers for its employees to continue working. The effect of the ongoing pandemic does not seem to be easing. It is predicted that we may take a year or even more to return to normal. Even then, a new normal, how do we then cope? Today, this current situation of economic will be scrutinized throughout this webinar. So, without further ado, I would like to call upon and to pass the floor to our honorable moderator, Prof. Dr. Roslina binti Ahmad Saufi, to proceed with the next agenda. Please, Prof.
Okay, thank you very much, Ms. Hatika, for the welcoming remarks on behalf of the MGSCB. I think I would like to call upon our honored guest, Chief Firdaos, to come next to me before I introduce him further. Thank you very much, Chief Firdaos. Okay, right. This pertamanya, Bismillahirrahmanirrahim. Alhamdulillahirrabbilalamin. Kita bersyukur pada pagi ini kita dapat melaksanakan satu wadah ilmu yang dikenali sebagai Mgseb Business Talk. This is a regular occasions where we have our students and also fellow staffs from various disciplines together with us in this intellectual discourse. And normally we will organize such talk like every month. The list will be once in 2 months. So to enhance the students' knowledge, to get a better view of what's happening within the fraternity of Malaysia and globally. So this intellectual discourse, and today topic will be very timely, especially we're going to listen to the PMX presentation soon, I suppose next week, yeah, October 13, this Friday, yeah, October 13, yes, October 13, he's going to present a very remarkable budget 2024, maybe within the theme of economic Madani or budget Madani. Okay, right. Assalamualaikum sekali lagi and selamat pagi kepada semua. I would like to introduce Mr. Firdaos. Who is Mr. Firdaos? So everyone knows Mr. Firdaos is the chief economist of Bank Islam currently, but formerly he was the chief economist at MARC Ratings Berhad. Prior to MARC Ratings, he spent almost 10 years in the ISIS, Institute of Strategic and International Studies Malaysia, which is a research organization. He has served in the Malaysian government as a PTD officer, and he told me that he opted to leave the government to venture into a very much challenging world in the corporate sector, where he moved on to pursue his master's degree in the UK and work with the private companies, and now he's in the Bank Islam as the chief economist. A very young chap, brilliant and vibrant. So this is what the country is needed at the moment. Thank you very much for coming and welcome to UMK and Kelantan, Cik Firdaus. Okay. Right, the theme today is economic updates. Are we ready for the post-pandemic era? Okay. And in conjunction with the budget 2024, which is going to be presented by the PMX this coming Friday, if you look at the current scenario, Cik Firdaus and fellow academics here, okay, since 2018, okay, our economic growth is always within the 4% to 5%. And in the year 2020, it was negative. It's about -5, I suppose. Yep, -5.6. And then it's recovering back in 2022 around 8.69%. And today in 2023, the growth, I would say moderate. It's not really drastic, but it's slow, moderate growth. And for the first quarter, we have achieved about 2.9%, right? So on that basis, the economy of Malaysia seems to be very volatile currently, very sensitive. Okay, I'm sure you have lots to share with us with the current scenario, not just the economics of Malaysia, but the global economic and how it impacted Malaysia per se. So I would like to welcome you. You please do whatever you do, okay, and to share your insights about the economic situations to us. Thank you very much. Yes.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Very good morning. Still morning, yeah? Okay. Very good morning to all of you. First of all, I would like to record my sincere appreciation to Prof. Roslina and her team for inviting me to UMK and giving me the opportunity to, say a thing or two about the Malaysian economy and where Malaysia is heading in the post-pandemic era. First of all, there's a reason why I put the topic, are we ready for the post-pandemic era? Before I get into my presentation, let me just put this on record that we are living in a totally different environment today. What happened was that in the past economic crises usually shape how we invent or formulate our policies in the post-crisis era. But now things are very different from what it was before, because COVID was something that was very different in many ways, and governments around the world's response to COVID were also very different, both from the health perspective and from fiscal perspective as well as a social part of policies as well. So things are changing as we speak, but whether or not we understand why things are changing and where they're changing to, where are these, are these changes leading us to, is a big question mark. So with that, can I proceed with my presentation? So just for the record, my presentation slide is a standard format by Bank Islam. So everything you see is red. It's red, gray, and white. There are no other colors. If there are any other colors, then that's not good, because that's not really our corporate color. Okay, let me start with, boleh? Okay, even better. Okay, all right, so I go up and down. Okay, great. Okay, most presentations will start with the introduction and all that, but I'm going to give you the key takeaways right away. So what happened in September? So interestingly, a lot of major central banks around the world met and to decide what is the right pathway to go as far as interest rate is concerned. So interestingly, major central banks, including Bank Negara Malaysia, has been raising interest rates over the last 18 months or so. And this meeting was particularly different. Why was that? Because ECB, the European Central Bank, was the only central bank that raised their rates. The Fed, Federal Reserves, Bank Negara, BOJ, BOE, what else? And Australian, RBA, RBA, Royal Bank of Australia, Reserve Bank of Australia, also maintain their rates at the current rate. So, as far as the US is concerned, they signal that there will be a tighter policy path, which means that there may be another 1 or 2 hikes in looming, and that will change as data changes over time. The ECB, they raised their rates by 25 basis points, but they said this could be the end of their current tightening cycle, which means that they are aware of the risk of higher for longer or rates, because as far as ECB is concerned, the current rate is actually the highest point since the creation of the monetary union. BOE is also interesting, where they see that inflation has come down, but it is still not at the level that considered comfortable for Mr. Bailey, the BOE chair, to say that this is the end. But the meeting actually halted the 14 consecutive rate hikes since December 2021. So, like I said, BOJ maintained, BOT, Bank of Thailand, raised their interest rates, and Bank of Thailand is different because their rates are low anyway. During COVID, they were circulating around 0.25, 0.5%, and now they are having trouble pushing it up. And the next one is Bank Negara. We have similar problems. So initially, Bank Islam, me and my team thought that maybe Bank Negara will raise its rates by 50 basis points this year. It means 2 hikes. But we ended up with only 1. And there is a strong resistance to push the rates up. And why this matter, I will tell you why later. Okay, let's start with the introduction. The global economy in 2023 and 2024. So this is how it looks like right now. The IMF, World Bank, OECD, and ADB, Asian Development Bank, have usually they have a couple of GDP projections, and their GDP projections, like in the case of the IMF, they usually do it for most countries as well as World Bank. OECD is usually for its own members, but they do have projections for non-members such as China and India. ADB is just primarily Asia. So in contrast with the previous projections by multilateral development banks, these are all called multi-development banks. They've been cutting their projections consecutively right after COVID. But this time around is different because they have been pushing everything up despite the increase in inflation rate over the last 2 years or so. So it's different. And in the case of OECD, they even upgraded the GDP growth for the US for 2023 and 2024, and as well as the global growth as well. So the projections, the latest projections by OECD in September are pretty much higher than what it was a couple of months ago. And the risks to the global economy are still the same. You know, with the financial stress, we heard about the SVB crisis, the impact, the contagion to Credit Suisse, etc. Price pressures are still there, geopolitical tensions. Now we are confronted with another, confrontation in Gaza, commodity prices and food prices. Now food prices has came down, but it will go up soon enough. IMF and OECD expect the global disinflation to continue into 2023 and perhaps towards 2024 as well. How do I click? Did I click something wrong with that? Or maybe you will click manually. Yeah. Okay. Okay. All right. Okay. So now I'm going to talk about specific individual countries, major economies around the world. Let's start with the US. Now, they has been really resilient, despite the interest rate going up as high as 8-9%. Real GDP growth for the US on a quarter-on-quarter basis, the second quarter of this year actually came in at 2.1%, which means that the nominal GDP growth is way higher than what it is. So as far as inflation is concerned, you will see that US inflation actually went up to as high as 9, I think, somewhere in the middle of last year, and it has come down. But there's a slight uptick last month, and this is interesting mostly because of the resilience coming from their labor market. US federal funds rate has been going up, and it looks like it may go up again. The next meeting for the Fed will be next month, and another 25 basis points should be, or rather could be, in the cuts. So in January, we said that Bank Islam look at how things are, unfolding back then, and we thought back then that the US would likely circumvent a recession this year. So there were a lot of questions around the world talking about the US may come into a recession. There's a hard landing because of the aggressive rate hikes in the major economy, but we think that because of the size of the fiscal stimulus that was unveiled during COVID, amounting to $5 trillion, can buffer a lot of risk coming from inflation and the high borrowing cost. Next. So the weekly jobless claims is one of the measures that we look into to see whether there will be a possible uptick in their unemployment rate or not. And it has been somewhat flat over the past 9 months or so, and but their unemployment rate, which I will show you later. Next, please. Okay, maybe the following one. But what I want to show here is that the Fed usually look at the PCE consumption expenditure, personal consumption expenditure. It is actually another measure of inflation for the US. So for the Fed, the unlike us, we usually look at inflation as a measure of rising or changes in prices in general. But US look at three things. They look at CPI, they look at PCE, personal consumption expenditures, and they look at super core inflation. So the super core inflation is actually core inflation, but they extract items that are deemed to be not supposed to be volatile, or much of it is linked to services sector. This slide is just to show that their retail sales has come down, which because of the high borrowing costs, and consumer confidence index has also tumbled of late because consumers don't think that they are able to stomach it for far too long, and that might change things from the consumer's perspective. Next, please. So the uptick in employment data is another headache for the US. So the latest count of non-farm payroll, MFP, actually came in at 336,000 versus 170 based on what economists were looking at. So the job creation in the US was actually much higher than what a lot of economists predicted. But on the right side of the chart, you see that the unemployment rate is at 3.8%. So there has been a slight uptick over the last 2 months or so. Interestingly, in the US, unemployment rate means different thing to them. Of late, we noticed that a lot of Americans are taking more than 2 jobs, 2 jobs or more to sustain their lifestyle. And we also noticed that a lot of this are contributed by those inclined in the services sector in the US. I will explain to you why this is different from Malaysia. But it is interesting to see that despite the rise in prices in the US, they are able to take on more jobs and they're still okay and without tipping into a recession anytime soon. Next. The Eurozone, they were supposed to be in recession early this year, but Eurostat revised their numbers and the second quarter turned out to be positive, 0.3% instead of a negative. So they quote-unquote circumvented a recession. Their CPI is still somewhat high, much higher than what they deem to be comfortable at 2%. And if you notice that the services sector has also come down, which is what the ECB want at this point of time, as far as putting inflation lower. The key interest rates, that I mentioned earlier, is the highest point since the creation of the monetary union. And I also mentioned that the major central bank, ECB is the only central bank that hiked in September. Next. The UK is also an interesting case in point. So you see that the bank rate is going up, which is the policy rate. CPI and core inflation are coming down, but still much, much higher than what we saw or what we're seeing in EU as well as in the US. The unemployment rate keeps coming up, so there's a lot of pressure in the UK right now. And at the same time, their manufacturing PMI, which is, for those who want to know how to read this chart, at any point below 50 is considered a contraction. So they have, as far as manufacturing is concerned, in the UK, they have been in contraction for most periods of this year, I believe. Yep, and perhaps even longer. Next. So China, there's a lot of pressure. There's a lot of pressure on China's growth on Malaysia. So Malaysia's second quarter growth was not only impacted by the ongoings in the West, but also in the East. And China is one of them. But China's growth appears to be okay, not too bad, but a lot of Western commentators, Western-based economists and commentators are saying that China's target of 5% GDP growth this year is not something that we should be proud of, or the world should be proud of, because they used to grow at 9%, 7% annually. But we have to bear in mind that China has now introduced what they call a dual circulation strategy, what they want to do is that while they focus on the external environment, they also want to continue developing their local talents locally as well. So that is going to be what it means. This dual circulation strategy is that China's growth is not going to be at super duper normal rates anymore. It has to be somewhat lower. So it's their version of trying to democratize economic development in China. Next. Okay, so PMI is still okay. It's still higher than 50 point, both manufacturing and services. But we are not sure whether it's too early to celebrate, because as far as exports concerned, it's still trending in negative territory, although it has come up in August, but still in the fourth straight month of contraction still. So we, of late, last week or 2 weeks ago, there was a Mid-Autumn Festival, and it's usually a point where they spend on consumer goods. But what we saw happen a week ago during the Mid-Autumn Festival was that a lot of their expenditure gone to tourism rather than purchasing goods and services. So it's just something to note that there are some changes even in China as we speak. Next. So let me bring your attention to ASEAN now. It's a region of everything. We have a different economic system, different political system. We have one of the lowest income per capita in the world. We have the highest income per capita in the world, all in one region. So it's a region of everything with everything. As far as the GDP growth is concerned, IMF and ADB expect that it's going to be healthy, and the region might still be one of the world's fastest growing regions in 2023. And the bulk of growth in the ASEAN region are due to basically just three major countries. For context, Malaysia was the third largest economy in ASEAN, and now we are fifth in a matter of 10 years. So where will Malaysia go to in the next 10 years remains to be unseen. And next. So I think the financial markets now I can just power through. This slide is just to show that in September, stock market was pretty much in red. And because of the anticipation of a lot of major central banks' decisions, and like Thailand, for example, were contracted by 6% on month-on-month basis because of the hike by BOT, and the weakening baht is also another challenge for the new government. Regional settlement was not good because oil prices actually went up, and there was even a comment that Brent may even surpass $100 per barrel, but it has come down of late. And worries about rates strategy by the Fed as well. Next. So this is just to show, can we go back? So if you look at from year-to-date perspective, KLCI is one of the not so good ones among the major equity markets. Next, please. So from the sectoral perspective, was also mostly in red. The sectoral performance are mostly in red, and they usually are driven by the finance sector. If the finance sector is good, then usually KLCI would be good, because about 42% of the basket of KLCI is because of finance. So there are a lot of talks about the OPR and all that. So by right, when OPR goes up, banks should do better, right? In theory, but they're not in reality. So it's a very different scenario now. So if finance is not doing okay, then KLCI most likely will not be doing okay. On the right side of the screen, there's a monthly foreign funds inflow. So as you can see from September onwards, which has been in negative, in red, as far as foreign funds into equities. It has been in red, but it has been positive. Next, please. To contrast to contrast this with the bond market. So when foreign funds flows don't usually follow the same way. So when foreign funds go into equities, and it will go against as far as bonds is concerned. The only time when both foreign funds go into both equity and bonds in the same direction are usually negative. So in this case, when equities goes up, bonds go down. So last month, in August, there were 5 billion worth of foreign funds left our bond market. But it is still considered okay because year to date, we're still higher than last year, well, way higher than last year. And if the current trajectory continues from year to date onwards, it could even surpass that of 2021. On the left side of the screen too is just to show that the bond yields for the US spiked so high last month, sorry. And this sparked a lot of debate whether this hard landing is going to happen, whether soft landing is even possible. We think that there could be no landing at all in 2023. But if you look at the trajectory, it's really, really high for the US. So it's like holding a broken glass with a glass full of water, but the glass is broken. So it can break anytime, but if your luck is on your side, then you might be able to hold it. But if it's not, it will just break as you know, whenever they want. Next, please. Oh, this is ringgit, which I might go into this later, but doesn't look too good for Malaysia, because in the next couple of days, it could breach the highest point in our history, USD to MYR. As it stands, I tak sempat nak check pagi tadi, but yesterday was 4.73. Our highest point in history was 4.747, I think. So it's not that far off as far as ringgit is concerned, against USD. Next. Okay, this is the sexy bit of the presentation. It's all about Malaysia now. And then you will decide whether we are ready for the post-pandemic era or not, okay? So the left side of the screen is just to show how growth compared between Malaysia and ASEAN countries. Now, we grew the fastest last year, the fastest growing economy in ASEAN last year. And rightly so, because we opened up economy, everyone was so excited with economic opening, and there was a slew of 145 billion worth of EPF withdrawals went into the economy without the government's, without touching the government's fiscal position. So things were good last year. But things are also coming down, and they're coming down hard, if you look at the left side of the screen. So for an economy that grew at 8.7%, now we're looking at the World Bank's latest projection came in at 3.9%. Internally, we're looking at 3.7%, and that is our latest projection as of June, kalau tak silap. It could be lower because of trade. And our trade has been trending negative over the past quarter, throughout the third quarter. So it is most likely that our GDP growth for the year might end up in the low 3%. So from 8.7 to low 3%. That's quite a big drop, and it will surely be the sharpest drop of growth rate in ASEAN this year. So real GDP growth on the right side of the screen is just to show how we have fared over the years from 1991 all the way to last year. So the dotted black line on the right side too is just to show that the official projection by the government, where they think that GDP growth will end up on average throughout the 12 Malaysia Plan period, which is from 2021 all the way to 2025. Do you think that's possible? I don't know. It'll left to be seen, but to achieve that, we need growth of at least 5.16% a year on average. So we got it last year, we did not get it the year before. This year, surely we cannot breach 4%, let alone 5.16. So so if you miss that average target, you have to grow way faster than that in the following year just to make up for the loss. Okay, next. Yeah, core inflation. Okay, so a lot of people has been talking about cost of goods in Malaysia, and rightly so, because the only time in our history that prices actually went down was when we removed the GST. And that was taxation-led downward pressure on prices, not because of economies of scale, for example. So inflation will continue to remain in a positive territory. But what I want to show here is that headline inflation, which means that the basket of all goods and services that tracked by DOSM, currently at 2%. But core inflation, the items that DOSM feels not volatile within their basket, is even higher. And the reason for that is 2.5%. And the reason for that is because of, I believe, imported inflation. One area that we rarely talk about in this country. So if we look at FNAP, FNAP is food and beverage inflation. So if you look at that, even food and non-alcoholic beverages. So for FNAP, headline is even higher than CPI, and if you take the core FNAP, is even higher at 5.1%. So when people talk about rising costs of food stuff in Malaysia, they are real. They are real, and the numbers are showing. And I believe that the government should really look into this because, it's so easy to, get out of control when food prices are being talked about. Not just in Malaysia, in any countries for that matter. But there are good news. Our unemployment rate has been trending lower. But pre-pandemic, each time when our unemployment rate comes down, there will be an upward pressure to OPR. But right now, even though unemployment rate is coming down, the upward pressure to push OPR higher, tak ada. And even though food inflation is high and core inflation is higher than headline inflation. So there are talks also about subsidy rationalization, which the core feature of subsidy rationalization means that all prices will have to be very much market-driven. Okay. Internally, we see that for every 10-cent increase in RON95, the price of RON95 will lead to 0.4% increase in inflation above baseline. So that's 10 cent lah. And the impact will be as early as within 3 months of implementation. So if you do it in January, latest by March, you will feel that inflation will hit you in one way or another. Next. So just now I mentioned about ringgit briefly, and so the left side of the screen is an interesting chart because the red line denotes the ringgit's value versus a basket of major currencies. So in June or May this year, ringgit actually trended at the lowest point in its history. It has come up a little bit, but the lowest point too was a lot driven by the strength of US dollar, obviously. But the strength of US dollar is matched by other major currencies as well because of the race to tighten because of inflation rate. And that is what is happening right now. So the dollar index, or DXY as we call it, has been trending slightly higher of late, which is pushing USD MYR even higher. So in the past, that when there is a slight change in Dixie, the US dollar, the US dollar index, it may or may not come up with a large margin in terms of value, the change in value in USD MYR. But now we're seeing there's a lot more. The correlation between Brent and ringgit is also not as strong as before. So even though we are a net energy exporter, which an increase in energy prices should benefit a country like Malaysia, but not so much of late. So things are changing, as I said, in the post-pandemic era. Next, please. So this is my last slide. So in the 12th Malaysia Plan midterm review, they come up with a series of projections for the fiscal position, economic indicators, whether it's economic, social, etc. And I just want to put in here the projections as far as fiscal position is concerned. So you will see that some are actually shrinking, some are actually expanding. What shrinks and what expands depend on how you look at this. First of all, the fiscal balance or fiscal deficit, as you want to call it. So the government wants to push it higher to achieve some kind of a balance by 2025. So to achieve this, it appears that the government wants to decrease its expenditure instead of improving revenues. The government revenues, and as a result of that strategy, the government revenue, top right side of the chart, you'll see that the official forecast coming from EPU, Ministry of Economy now, is coming lower and lower because of the reluctance of us changing the narrative as far as government revenue collection is concerned. Government operating expenditure will come down because to fit into the fiscal balance, the lower fiscal balance by 2025. Government development expenditure will also come down. So what I'm trying to say here is that there is a narrative coming from Ministry of Economy that the government may not spend as much in the next coming years. So that's what this whole projections, the current projections coming from the Ministry of Economy is telling us. Okay? So the question now is that whether we are ready for post-pandemic era, right? Well, it depends. It depends on many things. One is that whether we have to ask ourselves whether cutting expenditure is the right way to go. The thing is, why do countries cut expenditures? Let's just take, for example, okay, another word for cutting expenditures is austerity. Okay? Which country that we can put into like a case study for a successful austerity that leads to a proper functioning economy? Maybe Greece, because they were at the verge of bankruptcy, but the austerity was complemented by a lot of asset reliefs coming from the ECB. So they were not alone. It's not austerity alone, but it was complemented by the monetary policy side. So, and where is Greece right now? Still pretty much where they were during the sovereign debt crisis. It's not that much different than today than before. So austerity means you're going to reduce your expenditure, but reducing expenditure from the government's accounting point of view would mean that everything else will have to slow down because the high correlation of government spending to growth. So what will the unintended consequences of lower expenditure would mean that growth will also come in lower. So it all depends. The overemphasis on the need to achieve a fiscal balance is something that was probably something that we can pursue before the pandemic, but maybe not so much post-pandemic. Because post-pandemic, it's all about who can spend the most. And you will see that because of the pandemic, high-income economies were the one that unleashed a raft of fiscal stimulus, monetary support with record low interest rates. And that would push higher income economies further and further away from all other countries. There's another chart that I should have put in here that shows like a straight line. It's called an economic conversion model, where eventually the theory says that all countries will fall into one straight line from the lowest to the highest. So Malaysia was somewhere in the low 20-ish, 30% percentile. And because of our rapid development in the 90s, we managed to go up to 40-ish. But until today, we have not yet passed the 50% mark. And post-pandemic, it would probably be a little bit lower than that. So whether or not, again, we are ready for post-pandemic would depend. Which side of the line that you want to fall, that you want to be in. Bear in mind that as Malaysia grows, as we get mature as a country, our population also shrinking. Women participation today, female labor participation rate, if I'm not mistaken, is around 38%, where our fertility rate is now at 1.7 per female. So one of the Madani plans, Madani economic plans, is to push female labor participation to 60%. So what do you think will the birth rate, the fertility rate for women would be then? So there is a huge implication as far as policy is concerned. So maybe we can talk later when there are questions from the floor, but I just want to leave it to you that things are very, very different in the post-pandemic era. Thank you.
From the global perspective for what's happening in the UK, in Japan, even in the Thailand, as well as in Singapore, our neighboring countries, and down to Malaysia. So if you look from the perspective, there were many factors that actually affected the rising of the economic. Also, I would say the economic growth in Malaysia is a little bit steady at the moment. We are not really in the bankruptcy level like other countries. No, we are far from that. And it was quite surprising because the predictions last time, the inflation rate in Malaysia is supposed to be 4. But if you look from the core inflation, we are between, I would say, between 2 to 2.5. Yep. Okay, so that's still manageable, I would say. But of course, there are lots of strategy that must be come into practice for us to buffer the high inflation rate. Okay. All right, I would like to invite questions from the floor as well as from the audience in the virtual, if there's any. Any questions from the floor? Yes. Yeah. There's a cordless mic. No. No, I think we can hear you.
Okay. Thank you, Mr. Firdaos, for a very good session on global economic situation and what happening in Malaysia specifically. I'm Dr. Noor from Mgseb Biz. My question is just to summarize, and then I would like to seek your insight, being an economist, keeping the COVID and post-COVID situation. We all know that now globally economies are recovering and to greater extent, like if we talk about BRICS and then we talk about ASEAN and what's happening in the US. I would like to see your input on what's happening on a geopolitical stage. Like, although it is not a topic of security and all, but all these things indirectly affecting the global situations in terms of economies. Like what we saw in the COVID, that we saw the concept of deglobalization, where economies were relying on their own resources to build. And when we talk about BRICS nowadays, they are kind of de-dollarizing. Like if we talk about China, Russia, India, they are trading in their local currencies as well. That's also posing a threat to the dollar in a larger, context. So my question is that how do you see that currently now kind of destabilization in the South China Sea, and then what's happening in the Middle East? How you see that the global economic market will be impacted by these global events? Keeping Malaysia, the ASEAN, we see that the trade between the US and ASEAN is almost $1 trillion plus as compared to China, there's 700 plus billion. So there's a greater connection between the US market and the ASEAN. And then definitely nowadays any country cannot stay in isolation what's happening globally. So I would like to see your thoughts on, apart from the COVID, how the geopolitical situations that's impacting the global market. Thank you.
Over you, yeah. Would you like to take? Okay, can we have one? Yes, Dr. Shafika. Yeah. So one is about the geopolitical impact.
I don't have any question, but I just want to have opinion from you regarding the items of the CPI, Consumer Price Index, because we know that last year in June or July something, they have a proposal to review the items in CPI. So whether to decrease or to increase, what should be that exactly, to reflect the cost of living in Malaysia? Thank you.
Okay, I think we have two questions. Yeah.
Right. Okay, these are very good questions. Please keep them coming. Okay, first of all, about your question about the de-risk at the global stage and how it would impact the financial markets. Let me put this in a different way. We do not know where we are at the global economy, where the global economy is as far as business cycle is concerned. So we don't know whether we are definitely not in recession. We are probably at a recovery, but because of the aggressive rate hikes, we are probably at a boom stage and going into recession. But we don't know yet. So is this like a long way up or a short way up and then we'll go down? So and the reason for that happening at the global stage is that one, economic crises are getting more frequent and deeper each time. So as a result of that, I think generally investors are becoming more risk averse to small changes in the market. So you'll see that when there's something happening, and then investors would jump in and say, no, I'm de-risk. So and the reason is probably this, because the need to protect the nest egg when things are very volatile is very important to a lot of investors. So that's one thing. Second thing is the age factor, because the global economy is not in the position to take a lot of risks like what it was in the past. So we, as a result of that, the whole de-risk thing will feed into the narrative about de-dollarization and all that. But if you look at it in reality, there's no way King Dollar will be dethroned. For as long as there's no substitute currency to US dollar. There are talks about the Chinese yuan becoming an alternative, but the Chinese yuan accounts for maybe 3.4%, if I'm not mistaken, of the global central bank's reserves. Very, very little. So the next best thing to US dollar is euro. And even though euro has now become parity with US dollar, so 1-to-1 now, but the holdings of euro by major central banks is still much less than that of dollar. So in the case of the BRICS country, want to come up with their own currency, or maybe they want to trade into one currency over the other, that will complicate things further, because which one has the anchor monetary policy? If I were to use your currency, let's say that you are China, and I would want to use your currency, that means my transaction is also subject to your monetary policy. And your monetary policy is somewhat, linked to your fiscal policy as well. So if you reduce your spending, then that will affect monetary policy, and then it will affect me. So for as long as there's no substitute to US dollar, King dollar will still be King dollar. I mean, that's just how the world operates today. So going back to the de-risk part, so I think those are the major elements that I think will influence the whole thing moving forward. And for a small and open economy like Malaysia, we do not have the luxury to choose. So for things like global, geopolitical tensions and all that, that is totally beyond our control. What we can do is just to focus on what we are good at, what we can be better at. So looking at it from the lens of competitive and comparative advantage perspective. So in the past, Malaysia has always been the springboard to the world, through exports. We welcome, we created FTZ, we created MIDA, and all that in the past. And then, there was a slew of Japanese investments coming into Malaysia in the 80s and 90s, but that has gone. The Japanese are not coming. They have, in fact, I personally saw this somewhere in the late 2010s, because I noticed that a lot of their manufacturing has left, and a lot of their services investments are here. So the question that was asked, why are you bringing in services investments? Because they think that Malaysia has the ambitions to become a high-income nation, so I might as well set up my services sector here for you to utilize. So my investments in Malaysia as the end market, not as a springboard to the global market anymore. So things are changing, and things have been changing anyway. Going back to the second question about CPI, I think this is a brilliant question. So what happened was that two major things. Number one is that our CPI basket is relatively the same since 2016 compared to countries like the US, UK, well, US and UK mostly, those two, the ones that I personally look into. Their weights, their CPI weights changes every month. For us, it has not changed since 2016. So the reflection, so why is this important? Because especially after a crisis, to the lower income group, when there is a fall in income, the tendency for them to spend on discretionary items are much less. That means a lot of their disposable income is going to be spent on basic necessity stuff, basically like food. So for a low income, you would imagine that their CPI basket is very food heavy. So for every small little change in CPI as far as FNAP is concerned, will affect them in a big way. But we are not seeing that in our official statistics because we have not changed that bit. So we were supposed to change it before COVID, but COVID happened, so we had to delay everything. So you might ask, so why don't we do it now, since we have opened up our economy again? Well, it's tough. Because if you change the CPI basket, that means you have to change pretty much a lot of things, like the components of the CPI, the items that we buy in CPI. For example, like items, I remember this because I looked at it recently. Items like teh tarik, roti canai, nasi lemak, kway teow goreng. And these are major CPI items now. okay? And their CPI is much higher than headline, as high as 7%. Is it reflected? Not really. You can't really see it because the inflation rate seems to be at 2%, right? Everything is okay. But if you zoom into specific items, you see that some of them are actually very, very high. Like, these things. So you might ask, Firdaos, why do you think some of these items have much higher CPI than others? And the answer to that is the component of services inflation that is embedded into a good sector, like kway teow. Somebody have to fry that thing. That kway teow has to be delivered by someone. There's services element there that is not properly captured, because the CPI for services is just for services. They do not be able to extract this part of services. That's why the US have a super core inflation CPI. So they will extract the key element that they want to see in a little price changes. Whether we should do that or not is a matter of debate lah. But I think the CPI have to change definitely have to change every time when there is a crisis. When there is no crisis, every 2 years or so, there should be some kind of a revision, because incomes change. People get more income, people fall in their income ladder. So we need to put that into context again and put a proper weightage so that it is actually a reflection of how we spend. So, when people like you and me complaining, oh, harga mahal semua kan. Tapi some people say, tak ada, CPI 2% je. So,
Okay, what would your comment, with regards to the geopolitical situations that being uttered by Dr. Ullah just now? Would it have a very great impact on us, Malaysia, as per se? And when you say that, the decisions, the government is targeted that our growth should be at between 5 to 6, but in reality, we are moderately growth at the moment. So was that any reason behind it in terms of politicals or political wills or geopoliticals?
So here's the thing about having a national policy. In my books, having a national policy means you have to answer very, very, very basic things. We cannot talk about HDI and whatever. Those are actually high income issues. It's not our issue. It's their issues. Okay. We cannot put them into our context and say that we have to import everything that we think that is relevant for them. But when we localize many of these things just don't make sense. So when we come up with a economic model, the very basic question, Prof, that we have to ask, in my view, is that what to open and what to protect. Very simple. So once you know what to open, what to protect, you know that, okay, then investors will have a view. Okay, Malaysia is not going to protect this industry in this segment, we will come all in. And this is time tested. In the 70s, Malaysia announced that for manufacturing, foreign equities can go up to 100%. So the Japanese loved it. They came here and built factories, created jobs for our people. They exported, demand for ringgit went up. Because we liberalized the manufacturing sector. Penang is where it is today because we liberalized the manufacturing sector. So now we have to understand what is it that we want to protect, what is it that we want to liberalize. It's not just about targets. Having a growth target is just an aspiration. It's just a target. Like, I want to be 50 one day. Sure. Okay. Yeah. How to get there? Will I be healthy then? Will I be healthy? Will I be able to sustain? Will I have a job then? Things like that. Eventually I will get there, but how to get there? Can you imagine us having, banging the drums of being a high-income nation, but some of us still do not have access to treated water. Some of us still do not have access to proper roads. Some of us, even in city, Selangor as it's today, has no water. Some places in Selangor has no water today. Luckily, my house is not affected. And we are talking about high-income nation here. So again, questions like this we have to address because these are basic stuff. Okay. So again, what do we want to protect? What do we want to liberalize? So that is essentially what industrial policy is. For a small and open economy, we must understand that some things we just cannot be good at because we just don't have the capacity. So we have to let foreign investments come into Malaysia. But the question is, can we localize that talent? We bring people in, okay, we bring investment in, but does the localization happen fast enough for us to say that we have to create our own industry? One good example is automotive. We had Proton for so many years, but we did not localize that manufacturing capability. We did, but not fast enough. We cannot have a 100% Malaysian-made car from 0 to 100. You know, that's what essentially that is, in my view. But I'm not mainstream, so you know.
Thank you very much. Yes, Prof. Khairil, yeah. Sure.
You were talking about external uncertainties and this is beyond our control. How about looking at ourselves, talking about the political, economic of the local landscape? You're talking about when we are okay dealing with like okay, inflation is quite okay, but what happened now? I'm talking about the local political economics. People pesawah in Kedah, they are in a very much poor shape as compared to us, kan? So how can we reconcile in terms of the data that you crunch with the policy that we have, especially when you talk about foreign investor confidence on us is lacking, as well as our own locals punya population also lacking in terms of confidence in our political economics. This is a thing that I wish you would like to enlighten, because kadang-kadang kita tak perlu sembunyi-sembunyi. Since 2018, I mentioned to you last time, since 2018 we have 4 prime ministers. Policies keeps on changing. We have a 30 million population with 7 million counted and uncounted migrants. That pose a very, very, I would say, social punya dilemma. Okay, we talk about the food security. So now a lot of countries are protecting themselves, right? Kita ni kat mana? So this is a thing that is a challenge for us. We need to do something, as you pointed out just now. We are moving down in terms of Southeast Asians punya economics. We are moving down, kan? And then you mentioned perhaps in the 80s we had Proton much earlier. We were the so-called 4 Asian tigers, and then compared with South Korea, now they are far much ahead than us. Even in football tournament pun, South Korean tak nak dah lawan kita, right? So this is the thing that it's not simply facilities, but it's of a mental thing. Can you elaborate on that political economics of the local conditions?
Yeah, that's quite a loaded question, Prof. Because I think it's a very multifaceted question to answer. But maybe I can break it down. First, you mentioned about the political economy. Let's talk about politics without talking about politics, if I may. Okay. We finally got our hung parliament. Why I say finally? Because throughout, you know, I'm seeing this in Western democracies as well. There will be a point when democracy, the democratic system, or rather the political system, the electoral system, will reach a point of no return. And hung parliament is probably one of them. So in countries such as Spain, Israel, UK, Italy, Belgium, New Zealand, these are countries that happen to have a hung parliament and never recovered from it. So in the case of us, luckily we managed to get a government within weeks. Well, within 2 weeks of hung parliament, which is a very great feat. But the structural issue remains. Now, in our 2023 economic outlook that we produce in Bank Islam, we say that this is a very interesting, we are living in a very interesting era as Malaysians. Because not only we got into a hung parliament situation, but also we managed to get a government, a full functioning government within days. That's actually quite a very massive achievement. If you were to compare this with countries like Belgium with hundreds, like 400 or 500 days without governments, twice. But there's one element missing, and we put this in our report vividly. We said that for this government to be a solid government, they have to formalize it. It cannot be, Pakatan Harapan and Barisan Nasional. It has to be like some kind of a formal entity, and we put that in our report. So whether or not it happens, we don't know, but that's something to look forward to. Because whether we like it or not, a hung parliament would require a huge political will from all sides, and not just the victors. Now, about the political economy, I think the government is acutely aware of what's happening. So they know that wages are not growing or stagnated or even came in lower. And you're right in pointing out that the agricultural sector and the plantation sector are the ones that are massively sidelined from the fruits of economic growth. But there is so they have an answer to it. And the answer is progressive wage model. So the progressive wage model is going to mirror that of Singapore, where they look at the lower rank of the wage structure, like cleaners, janitors, security guards, etc. And the progressive wage model in Singapore aims to create like a ladder to them. So today you are in junior position, tomorrow or some years you become a supervisor, blah, 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 so that your wage will go up even though you are in that industry. Now, Singapore has no agriculture industry, has no plantation industry. We do. And if we were to take the wage structure, the lowest point is probably these guys. So we have to create some kind of a wage structure, a progressive wage structure for the petani, pesawah, penoreh getah, and all that. Now, the problem is, will it make our competitiveness better or worse off? Because if we were to push wages of our petani, it will create an incentive where the wage will feed into the price of our beras tempatan. So eventually, imports will be cheaper than local production. So how do you justify having a lower quality rice but high prices when imports are better and cheaper? So this requires a very structural change. And what about plantation? We are depending on foreign laborers. So if we want to do that, then what about our competitiveness between palm oil exported from Malaysia versus Indonesia? We do not have GSP status anymore. Indonesia does. So they have a leg up. We don't. So if we want to do this, then again, there'll be structural changes going to happen in motion as we speak now. So what I'm trying to get to here is that while we talk about reforms, we talk about the things to change the economy towards an income economy, blah, 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 but the question that we should ask is how fast can we do it, or rather how slow can we do it, or whether we can do it better than what we're seeing in the West. We don't want to be like the West, where, when they cannot grow anymore, they pinpoint it to the women. Women have to go and find jobs. And then when their growth rate suffers, they blame women again. No, it's not right lah. I mean, we have our own Eastern cultures, and it is not necessary for us to import everything coming from outside. Let's make use of that, because that is our strength.
So would that be selective subsidies, for example, like Cuba, right? Subsidized in terms of American subsidized soybean farmers, right? So this is in terms of input, in terms of trading. So perhaps not talking about for the whole restructuring of the workers, perhaps it's more like a selective subsidized giving, just like go on 95 or more. So because sometimes kadang-kadang you need to find solution, but sometimes there tend to be a gap as well for those who are tersepit yang macam ni.
So, since we have the aspiration to be a high-income nation, in one way or another, we have to follow what they're doing. But how do we want to follow? And again, going back to the post-COVID, post-pandemic era, so what we know is that high-income economies have managed to unleash a very massive fiscal size, which we did not. And now we're saying that, okay, we should tighten the purse string even more. So are we going further or can? So when it comes to subsidies, a different approach. I think that since you did not, you did not push for a big fiscal size during COVID, now is the time. So instead of you giving one big punch in the wall, you give a slow punch but consistent in terms of force. Just to create that dent. So while we talk about subsidies, we should reduce them. Yes, I understand, but those were relevant before COVID. After COVID, things are different. So subsidies must continue. If you don't, then our growth will suffer. We will move further and further away from becoming a high-income nation. So that's the point. Unless we can all agree that becoming a high-income nation is just a pipe dream, and then it's okay. Then we just talk about the dream, but never having the actual pathway to achieve that, So that's probably.
More like balancing the political wheels.
So, as far as subsidies is concerned, my take is that if we cannot unleash one go, subsidies will be our fiscal injection throughout a longer duration period of time.
It has to be targeted subsidy then.
Later, maybe later, not now, because we don't want to suffocate growth too fast.
Right. On that note, okay, thank you, Prof. Khairil. Okay, when you mentioned about, I think Prof. Khairil indirectly mentioned about there may be group of the populations of the rakyat is actually suffering. So let me bluntly, do you think that one day what we're afraid of is that the rich will becoming richer and the poorer will becoming poorer? So in conjunction with this budget 2024, what would you anticipate would be the key highlights and how? Because when you talk about economic madani and budget madani, it is about like fostering well-being of the rakyat, right? So the aim is that everybody can spend comfortably, but at the ground, as what you mentioned just now, in reality, it's not really happening. We feel how much, I mean, even to eat roti canai also now become 120, but if you go to KL, it become 2 ringgit, roti canai kosong, right? Okay, so what is your take? What would be the emphasis of this budget 2024, and how would you think that can address the issues of the social well-being of the rakyat?
Prof, why are the questions so tough, Prof? Can you give me easy ones lah? Aduh, tak ada easy question lah gini. Okay, I think the budget that will be unveiled this Friday is going to be first of all, there will be much of it has already been released by the PM. during the Madani economy plan, because I think bulk of it is really, it's all about the budget anyway. So that's one. Secondly, since they're talking a lot about the subsidy rationalization, maybe they will do it, but be mindful of the inflationary impact. So, okay, hear me out. Some economists believe that instead of doing subsidy rationalization, you introduce GST. Tengok, semua dah buka dah lain. Okay, hear me out first, okay? Okay, I'm not making a statement, I'm just telling you. So some economists believe that doing a GST is better than subsidy rationalization because both are inflationary. So whether you do this or do this, both are inflationary. But remember the slides about the global economy that I showed just now? About the broken glass? It may tip over any time. Which one do you think will give us a better buffer? That's the point. That's the point. So if we do not have that buffer, we will end up, borrowing from the future, i.e. issuing government bonds. Your debt level will go up again, your growth dah jatuh, then you are borrowing for these kind of purposes. Kan? So that's one perspective. But the other narrative to that is that while subsidy rationalization you can do it almost immediately, while the GST you can't. You have to give some time, time frame for businesses to get ready. The processes, are they, do they have enough accountants? What are the baskets? What are the exemptions, etc., what rate? So there must be a lot of thoughts that go into that. So in theory, GST is probably make us better equipped in the event of a hard landing at the global stage. But we do not have the luxury of time right now. Itu dia. But okay, you mentioned about inequality tadi kan. So inequality is a very interesting thing because the only country that has a very low level of inequality in this region is Myanmar. And the country that has the highest level of inequality is Singapore. So this is the cost of being rich. The people who are able to spend, are more efficient in many ways, will have to go further, while those who can't will have to be left behind. But again, this is a fact of life. Unless you want to be an equal society, it means that you have to embrace some kind of a socialism/communism or somewhere in between. So I think that's something that we probably have to think about.
Right, anymore, I think we have a bit more time. We can have 2 more questions.
Okay, kita ada question from the participant via online, Facebook, from Dr. Adam Ediza. Okay, first question, what is your prognosis for private businesses, especially SMEs, over the next 2 years, considering the trend and forecast rates of interest, exchange rate and inflation in Malaysia? And second question, nak jawab dulu? Okay. Second question, given that the Malaysian economy is an open economy and the action of other economies do affect what happens here at home, where do you see Malaysia in the current global competition for FDIs? Is Malaysia strong enough to encounter the rising profile of other emerging Asian countries as Vietnam, Indonesia, Thailand and the Philippines? So ada 2 question lah daripada Dr. Adams.
Okay. Question number 1 is about private sector and how they can pretty much sail through the next 2 years with the high interest rates, diverging foreign exchange rates, etc. I think the private sector is really, private sector is very nimble and they're very fast when it comes to reflecting to changes in the financial market as well as the economy. One of which is actually our food importers. So what I noticed of late is that because of the unfavorable US dollar ringgit exchange rate, we are not importing enough food, or rather we are importing less food since January to August this year. So when it comes to beras, we talk about issue beras these days, and our local production has also been is coming down. So as far as beras is concerned, we are being hit from two fronts. One is that we are not importing as much. Second, we're not producing as much. And the reason for that is because the average price per ton has increased by 16% for rice. This is rice alone. So imagine that you are an importer and prices has risen by 16%. Would you import still, or would you not? Because if I import, then I'll be left with a lot of rice that people are not going to buy. Because, local rice are cheaper. So why should I import? So that is the conundrum. And it's not just about rice, it's with regards to other food stuff as well. And this is the first 8 months of the year. So the question that was raised just now is what will happen in the next 2 years, whether they can sail it through. My worry is that when the government wants to decrease their expenditure, so when the government reduces their expenditure, so will GLCs. So will other modes of economic actors too. Because the government may not issue a lot more government bonds, and as a result of that, things will slow down. And private sector would probably be in a very precarious situation as to how do we go about this. So I'm not saying that this is a wrong thing to do. So if you want to reduce your expenditure, which is fine, you have to complement it with something else. And that something else, in my view, is economic liberalization. You have to open up your economy. You have to tell investors that we do not have expertise in this sector, we're going to open up 100% equity or something like that. Or make it very clear, what is the perimeter of the Bumiputera participation? What is it that they can enter without having influence by GLCs, for example? Things like that. So you want to reduce, fine, but you're going to open. So that's probably my answer to the first one. So the second question was, what again?
Okay, the second question from Dr. Adams.
Given that the Malaysian economy is an open economy and the actions of
Oh, okay, I remember. Okay, so let's just say that it is not something new to Malaysia, where we were the regional hub for auto manufacturing. Thanks to Volvo, they came to Malaysia first, and later when Mitsubishi came to have a full-fledged manufacturing capacity, and other Japanese manufacturers want to come in, but they were not able to because of the protectionist nature of our auto industry. During that time, it was also during the time when ASEAN wanted to emulate what Europeans are doing as far as economic integration is concerned. So they had EU, and ASEAN thought maybe we should have something similar called AFTA, ASEAN Free Trade Agreement or area. So because of that, in 1992, 10 countries come together and say that we want to have an agreement. Malaysia took the longest to accede to AFTA. And one of many reasons why is because of the automotive industry. We did not know whether to protect or to liberalize this sector. So because of this, the Japanese actually went to Thailand. And it became Rayong. And we lost a lot of manufacturing capacity there. Now they're moving to Indonesia because maybe Thailand, I think the Japanese understand that the big flood that happened in Thailand somewhere in the early 2010s actually was very costly to auto manufacturing. So they were thinking of another way out, and they were looking at Indonesia. So in terms of regional competition, this is not something that particularly new. It has been happening for decades. But we are comparing ourselves with the likes of Cambodia, with Laos now, where we, like I said earlier in my slide, that we were the third largest economy in ASEAN. We are fifth now. And the last slide that I showed is revenue to GDP. Our revenue to GDP is likely going to be the second or the third lowest in ASEAN by 2025. And this is projections by Ministry of Economy. So this is, it's regional competition will eventually shape our development policies. It's not we want to develop this economy, this industry and that, because it depends on our neighbors. If our neighbors said, oh, Malaysia is doing this, okay, fine, we will open up everything. Then we will lose out anyway, So it is, it's always about what is happening around us rather than ourselves. It's the Roma growth theory, or the lack thereof.
Thank you very much. I think we can have one last questions from the floor here. Puan Azian, yeah, I see that there's a burning question from you. Yes, please.
Thank you, Prof. Roslina and Cik Firdaos. Of course, my knowledge in this is minimal, but I will try. Now, in terms of fiscal balance for government of Malaysia, like you said, everything is reducing. Government expenditure, revenue, and development expenditure as well. But at the same time, there is pressure from community to increase their salary. Contohnya PDRM, they want up, or even the penjawat awam. And at the same time, the government, the Prime Minister is going outside of the country to market for investment, foreign FDI, and UAE, for instance, okay? And so, how do we stand in this position? And you being a banker, and our regional outreach, we can't say that, oh, other countries are better off than Malaysia. We are now slowing down, going on a fifth position. Now, in terms of financial banking sector and so forth, Contoh Maybank, they go all out for regional outreach to expand business. So how do you see this? I see a lot of contradiction. How do you see this, Chief Firdaos? There are pressure, for society. They want increase in salary, and government want to reduce spending. Yet they go outside to find FDI. I mean, this is the dilemma. I mean, to me, I see things going okay. I mean, 2% inflation rate, and people are surviving. And you can see, for instance, in Kota Baru, there are lots of new restaurants open at night, lighted, without even anybody sitting there, because that's the only way they have to make money. That's how they're surviving, selling food, not in other areas. Banyak sangat kedai restoran kalau you move about at night, lighted, tapi orang tak ramai. Certain areas sahaja. This is the dilemma that I would like to see under, like you say, post-pandemic. How are we ready for this kind of situation? Where are we going? Thank you.
Thank you, Puan. Just like you, I'm trying to connect the dots too. I mean, I'm being brutally honest here. I'm trying to connect the dots too. I see numbers day in and day out, and I still trying to, connect the dots and see what kind of picture that I am able to draw. One interesting finding that I recently found out is that I took the liberty to go into our unemployment rate, and I realized that our frictional unemployment has actually come down, which is not something that it's not something that Malaysians would do, but they're doing it now. So there are two types of unemployment. One is frictional, the other one is structural. Okay? So structural means people who are at the working age but are not able to participate actively because of health and other reasons or skills, mismatch, blah, blah, blah. But suffice to say, they are not able to participate. So in all economies, there will be like a band of structural unemployment, okay, like a percentage. So frictional unemployment, on the other hand, is those who can participate, but either waiting to get a job, have applied for a job, or have no interest to find a job, but they are physically able. Now, that number, that frictional unemployment has come down. What it means, probably, is that when prices are going up, they see the need to find jobs in the post-pandemic era. So that's one. Second is that it's okay. Let's just say this. Okay, the government wants to achieve 40% labor share, 40% labor share of GDP. That means wages, if you combine them together, will comprise of 40% of GDP, and the rest will be gross operating profits, or gross operating surplus, which means corporates' profits, and the other one is taxes and subsidies. That's the three components of GDP from income perspective. Now, right now, as of 2022, our GDP, our wage to GDP was 32.4%. Before COVID, it was 37.8, tak silap. So there's a massive drop now in terms of wage to GDP. That means wages have dropped a lot, by a lot margin. Okay? While our minimum wage has gone up. You see? Okay? So now the government wants to, and I'm not making this up, okay? This is what the 12 Malaysia Plan midterm review says. I'm just, paraphrasing. So they want to achieve 40% of GDP by 2025, which means that you have less than 3 years, effectively 2 full years, with maybe 2 months remaining. So with about 26 months to go, you want to bring from 32 to 40%. How much will your minimum wage be? That's number one. Number two is that it's percentage, kan? So right now 32.4. So you want to increase it to 40. That means GOS and taxes and subsidies must be reduced. So taxes and subsidies usually are pretty flat. So your corporate profits will come down. So that's actually what the government is trying to tell us. Itu dia. So it's a transfer of income from corporates to wages. Whether this happened or not, that's a different story lah, Prof.
Right, thank you very much, Cik Firdaos and the rest of fellows of audience, okay, physically appeared today. My last take, and I will pass to you for your concluding statements, okay, from your analysis. So you have mentioned about the global outlook and how it touched base to the Malaysian economic scenario, upcoming scenario in 2024. So one question from me, and I will pass to you for you to conclude. Would you think that Malaysian is a fast-growing economy? And you will wrap up.
It depends what you mean by fast. Because if you look at it, if you were to compare fast, the word fast, from our past experience, the straight answer is no. We used to grow at 8.8% annually. During the 90s, annually now, okay? And now we are struggling to even reach 4%. So from that perspective, no. But if we were to compare with countries that are within the ban of those countries with debt to GDP of around 60%? The answer is yes. Well, we are somewhere in the middle. We're not very fast because now countries like Guyana is much faster than us. I bet many of you have not heard of a country called Guyana. It's, okay. So, from that perspective. And the other perspective, if you have to look at it from the size of the population, GDP size. From GDP size, we are okay. Not too bad, but okay. So it depends from what perspective. But in my view, we cannot go back to the future, to say that we should grow like in the 90s. In the 90s we go this and that. Things are completely different. Our unemployment rate was very low. Our trade to GDP was high. Revenue to GDP was high. Debt level was low. So things were very, very different back then. For us to go back to where it was, we need another Japan. Back then, we had Japan with a flying geese model. So Japan in the middle, in the front, and then while the baby ones at the back, including us. So there were, of late there were talks about, the flying dragon model, where China is in front and the smaller cicak at the back, to follow China. But that is not going to happen because China has changed its strategy now from BRI to dual circulation strategy. But we need another Japan. We need an anchor economy, an anchor major economy for the source of our FDI. It's just as simple as that. And if they want to come, they would have to say that what they want, and we have to give it to them. Like in the past, Japan said, I want full access, which we did give that to them. So my concluding remarks, Prof, is this. Talking is easy. I can say this because I'm not in the government. Yes, from my perspective, I can say that, government should do this. Yes, true. But doing it is very different because I was from the government before, and I know the painful process that they have to go through. Because when you are in the government, you get information from different sides, and you don't know how to prioritize. Because sometimes you feel that, this one makes more sense. But this guy comes in and say, hey, you know what? That one doesn't, mine is better. So you as the driver, you have to decide which one makes sense. While you decide, you might make a mistake because of incomplete information, imperfect information in economic terms. So, which means that you have to take risk. And if you have to take risks as a politician, you have to take punches. Right? So, I'm not saying whether we should or not do that. I'm just throwing it out, to say that that it is difficult to do. Very, very difficult to do. Especially now when, we have the SDG with, I can't remember how many targets there are. And then now there's COP, targets, Paris Agreement and all that. It complicates policy making. So now we don't know what comes first anymore. But in my view, first and foremost, access. There is no alternative to access. The reason why rich economies, advanced economies are able to be where they are today, because they have access. Access to quality education, access to quality infra, access to pretty much everything. They have access first. Like the Chinese say, to be rich, you have to build roads first. Now, masih lagi basic, belum jalan tar lagi. So kita nak create highway pula, Prof. So, build access first. If you are really overwhelmed by everything, focus, what access can I improve? And inshallah, I think everything will fall into places.
Thank you very much, Cik Firdaos. So I think you have said a lot and shared a lot to us. Okay, and one key takeaways which I would like to wrap up everything is what he suggested about the economic liberalizations. You know what's your target and what to protect to. So that will answer to everything. On that note, once again, thank you very much, Firdaos, for coming all the way from Kuala Lumpur to Kelantan and to UMK. And on behalf of the University Malaysia Kelantan, especially the Malaysian Graduate School of Business and Entrepreneurship and Business, and also the alumni of the MGICB, I would like to thank you for your presence, and I think your sharing has made a very splendid effect to all of us today. Thank you. And to the fellow audience through online as well as being here, once again, thank you. And don't forget for our next MGICB Biz Talk in the upcoming month after the budget this Friday. Thank you. And saya sudahi dengan wabillahi taufik. Wassalamualaikum warahmatullahi ta'ala wabarakatuh. And I'll pass to the MC.
Thank you, Chief Firdaos and Prof. Roslina. And excuse me for the nasal sound and husky voice. Okay. Now we reach at the end of our session. And before we end our session, I would like to invite Prof. Dr. Rosalina to give just a simple token of appreciation to our guest speaker. Please, Prof. Thank you, Prof, and thank you, Chief Firdaos. Well, now we are the end of our session, and on behalf of the organizing committee, I would like to extend our deepest appreciation and to the honorable guests and all participants to be here. And I will apologize for any circumstances and shortcomings arise throughout this event. And shall we have group photo outside this hall? Can we? Here, di sini. Okay. And with that, I end this session with wabillahi taufiq wal hidayah. Wassalamualaikum warahmatullahi wabarakatuh.